In today's video, I'm going to take a look at the potential breakout in gold and what I'm watching to tell me if the breakout's going to fail. So, um, back in April and May, we were looking at this pattern here as a potential triangle consolidation. But if you'll watch my videos, I noted that I didn't think it was going to be that easy, that a breakout from the triangle would get follow through and we get another leg up. The bullion banks are still caught in this large short position, although they have managed to cover a significant amount of shorts, but they're still pretty heavily short. But it was unlikely, in my opinion, that they were going to allow a breakout from this triangle to get a sustained move higher without a significant fight. And that's exactly what happened. And I've said months ago that I thought this would probably, rather than being a triangle, it would probably turn into a consolidation box. And that's what's happened. And 1750 was their line in the sand. That's the resistance point that they were defending. They wanted to keep gold away from 1800. 1800 is kind of the last line of defense. Once we get through 1800, there's risk that gold goes all the way to the all-time highs a little above 1900. There just isn't really a whole lot of resistance on the chart between 18 and 1900. All right, so you can see after multiple attempts by the bulls to get this above 1750, it finally broke above this back in late June, and then rallied quickly to test that 1800 level. Didn't take gold long to break through that, and so technically it has broken out of this box. And as I said, there really isn't a whole lot of resistance. Once we break out above 1800, there's not a lot of resistance between there and the all-time highs a little above 1900, but there is still risk that this could turn out to be a false breakout. So that's what I'm watching right now. There's very often on a breakout there's some kind of retest. Sometimes the retest will hold, and then the breakout will continue with a sustained move. Sometimes the breakout fails, and you drop back down into the consolidation box, and then you kind of start this whole process all over again. So my suggestion, gold is the cyclical driver for the metals. So I'm using gold as my stop for all my other positions in miners and silver. You could use, if you want to use a tight stop, you could use any close back below, let's say 1800. Let's call it 1790 to 1800. Let's just give it a little bit of wiggle room and say 1790. So if gold drops back below, let's say if it closes back below 1790, then it is officially a false breakout. We're back in the consolidation box. Now, this intermediate cycle is getting a little long in the tooth. It's probably time for a move down into a half cycle low. That may be what has started here the last 2 days. So it is possible that we get a move back into the consolidation box that just turns out to be a half cycle low, runs a bunch of stops, and allows smart money to knock people out of their shares and their ounces, and they pick up those shares and ounces a little cheaper, and then they're positioned for the next move up. And what I'm going to be watching is the RSI. So in that case, if you're worried about a whipsaw, then my suggestion is to give your position a little more wiggle room and move your stop down to 1750. That was the level that the bullion banks defended for almost 2 months, And if gold drops back below, and especially if it closes back below 1750, I think at that point you've got to just accept that they've stopped the rally, and they have probably started an intermediate decline. So at that point, gold would be in the declining phase of its intermediate cycle. At this point, we're still in the advancing phase of this intermediate cycle. Started here, um, first leg of the rally, then we had very long sideways consolidation. We're trying to break out of the box, consolidation box. We're retesting the breakout, and now we just need to be aware of what's happening, be a little careful, place a stop, 1790 to 1800, or if you want to give it more wiggle room and decrease your chances of maybe just getting whipsawed out on a half cycle low that then reverses and goes higher, then I would say use a hard stop below 1750. If gold drops below that, then we're in an intermediate decline. We're in the declining phase of the intermediate cycle. Those often last 4 to 6, sometimes even as long as 8 weeks. Usually the weekly charts will get oversold, and I'll convert this to weekly in a minute. But if that's the case, if we are moving down to this half cycle low, then I like to look. I like to look at the 3-day RSI for half cycle lows. If I'm talking about a full daily cycle low in anything really, it doesn't matter, stocks, gold, oil, whatever. I convert this to 5-day simply because the daily cycle lows, full daily cycle lows, tend to be deeper and more severe correction as opposed to a half cycle low. So if this is going to be a half cycle low, then I would expect the 3-day RSI to come down here and get at least a little bit oversold, but I would expect that it wouldn't stay oversold very long, and then it would turn and rally again, and that's, as I've said before, that's a characteristic of a market that is still in the advancing phase of its intermediate cycle. Oversold conditions don't stay oversold very long. And you can kind of see that this is what has happened, even though we've been in this sideways churn and consolidating. These oversold conditions, they don't embed in the oversold condition, and they don't get deeply oversold before turning back up. And if this is just going to turn out to be a half cycle low, that's what I would expect. I'd expect this 3-day RSI to come down here and maybe poke a little bit below the oversold level, and then immediately reverse, and we start the next rally, and the rally should become heavily overbought like it has here, or embed in the overbought condition like something like this or this. And again, those are characteristics of an asset that is in the advancing phase of its intermediate cycle. So too early for me to tell at this point whether this is going to just turn out to be a brief little dip down into a half cycle low, and then we've got another move higher, and we make a serious run for 1900, or whether the banks have enough firepower left to push this back down into the consolidation box and break 1750. If they do, then you just got to admit defeat. The banks have won this round. They've won this battle. They're not going to win the war, but they will have won this battle, and they would have prevented a run to 1900, and they would have started the declining phase of the intermediate cycle. So, either use, I'm going to say 1790 because that's where we topped here, roughly 1790. Use 1790 as your stop. If gold goes below there, you could stop out at that point. Do so, of course, with the understanding that you may be getting whipsawed, because this may just be a half cycle low that's going to get oversold and then immediately rally again. That's kind of the way I'm leaning. I would say I'm not terribly confident that's going to happen. I'm going to maybe 60% convinced that we're going to move down into a half cycle low, maybe break back into this consolidation box, trigger a bunch of stops, allow the big money to scoop up shares and ounces a little cheaper, and then we make a serious run for 1900, and maybe 40% convinced that um, the bullion banks are, well, I know they are. They're going to try and turn this back down. They're still stuck in that short position. I just don't know whether they're going to succeed in breaking uh, or in stopping this breakout. I'd say maybe 40% chance that they're going to succeed in stopping this breakout, and this turns out to be a bull trap, a false breakout that then comes back down, breaks the 1750, and I don't think we're probably not going to go significantly below this low. If that is the case, I think the next ICL is going to be um, kind of another sideways affair. So I'll widen the chart here a little bit. I think the next when we do start the declining phase of this intermediate cycle, I think it's going to look similar to this, although it may not have to last as long as this. I think this intermediate cycle is getting pretty mature, and we've made a higher high, so it's right translated. So I think really all we need is 4 at tops, maybe 6 weeks if we're starting the declining phase of the intermediate cycle. And I doubt that it's going to go much below this 660. Maybe we go down to 650. A marginal break below that, and that's probably about all we're going to do. I don't really think we're going to get a sharp, big scary bloodbath phase type sell-off. Nothing like this. This was triggered by the stock market and the CRB dropping into, for the stock market, it's one of the worst 4-year cycle lows in history, and it was a final 3-year cycle low in the CRB, and that pulled the gold down along with everything else. So this was the last intermediate cycle low, bloodbath type decline, very scary. I don't think we're going to see another one of these at the next ICL. I think it's going to look more like this. So not a whole lot of damage. Points wise, the damage will be more in creating a lot of frustration, because it'll be a very choppy back and forth grind that kind of takes money away from both the bulls and the bears. Every rally will look convincing, but then it won't follow through, and then it'll turn and go back down. So it'll look pretty much just exactly like this. So a lot of people lose a lot of money during this mess right here. And if we're starting the declining phase of the intermediate cycle, it's going to be very pretty close to the same thing, only it'll be with a slight downward drift and probably some kind of at least marginal break below this last daily cycle low. But I really doubt that we're going to go, probably not going to go below 1650, and if we do, it won't be by much. Maybe we just, at that point, the 200-day moving average will be moving up. Maybe we just come down to tag that 200-day moving average, and then I think we would start the next leg up in the next intermediate cycle. And then real quickly, silver. Now, silver is a really thin market, so I kind of take everything with a grain of salt in silver. It can do all kinds of weird technical things, so technicals don't really mean a whole lot to me in silver. I mostly just follow and track gold, and if gold has started the declining phase of the intermediate cycle, then silver is going to follow gold down. If gold is still in the advancing phase of the intermediate cycle, then silver is going to follow gold up, and usually towards the end of the cycle, silver will start to really outperform. And so we've got a breakout above this resistance level here at almost 19, kind of tested it on Friday. And that's one of the things that makes me think 60% possibility that gold is going to hold the breakout and then make a run to 1900, in that we haven't really seen this really big percentage euphoric type moves in silver. And you can see here was a classic example of the ending phase of an intermediate cycle. This is kind of what silver tends to do during the last week or so of an intermediate advance, and we don't really have that yet. We've just we got a breakout and a retest of the breakout, and I don't see anything yet that looks like this really euphoric type move where everybody starts to pile into silver, as the end of the cycle approaches, and everybody becomes very, very convinced that the metals are going to the moon, and so that's kind of the mentality that creates this final explosive move in silver. And I don't see anything here yet that would suggest to me that we've got uh, anything that looks like a final explosive move in silver. So that's part of the reason why I think there's at least a 60% chance, I guess I would say, for gold to hold the breakout and make a run towards 1900. And if gold does make a run to 1900, I think silver will break through this next resistance level here around 20 and probably test the baby bull highs here at roughly 21 before this intermediate cycle top. So I think there's a lot of potential here in silver. If gold can hold the breakout and head to 1900, I think silver's going to make a run to a little over 21 and test this resistance level as well during that run. And that would give us that big final euphoric move in silver that I kind of look for that marks the end of an intermediate advance.